Oh, number 14. This is the one. I got a feeling that this podcast, this is going to be the one. Your week, sir.
My week, yep.
Has been a week. Not like the stock market week.
No, it's been a week. Yeah.
I'm Cody from Wall Street Breakdown. You're Anthony.
I am.
Tell us about your week.
My week. Well, as we heard in the last podcast, I had hurt my elbow. I tore my tricep.
Tore your tricep and the tendon.
And the tendon. So I just had surgery last night. They drilled a couple holes in my arm.
But you're here.
But I'm here now.
This isn't your avatar.
No,
you aren't my autonomous Anthony. This is my actual
real Anthony.
This is real Anthony.
Flesh and blood.
You did cardio earlier.
I did.
Cardio.
Yeah. 11 clicks cardio.
24 hours removed from having your tendon anchored into the bone in your arm.
That is correct.
You're a trooper, sir. You're a trooper. We are going to have one heck of a podcast. There was a lot of news. I don't know if you've heard this about the stock market. They have this thing that happens quarterly called earnings.
Never heard of it.
Never heard of it?
No,
well,
no. Sounds fun.
It came on like a deluge this week, and it is not slowing down. So we have a lot of earnings to report today, specifically.
A few, anyways.
Oh my! And next week is not slowing down. So this is going to be a show. Buckle up and secure that tricep, my friend. Take it away, sir. Right. You run the forum.
Oh, let's take a look at the markets. How is Canada doing?
The markets in a whole. Before we even get into Canada.
Oh, yes, for sure.
Markets up all across the board again. The talk. The chatter has started, and it's started to become more and more resounding as you hear it almost across every channel of analyst and bank and activist investor. They're starting to wonder, are we overbought? Things have been going up for so long. I still can't see it. These earnings this week just let us know that the economy is still roaring. So while everybody starts to wonder, they're trying to call a top. You know, at the end of the day, what people are trying to do is they're trying to be the ones that called it, that said, I remember back in January of 2018 when I said we were overbought, right? They're trying to call this top. The Dow up again, NASDAQ up to close the week again, S&P 500 up again to close the week, all 11 sectors in the S&P 500 up on the week. Nice. All 11 sectors.
Good.
Tell me where the bad economy is. Everything is, price to earnings right now is high. Like everybody, when I say everybody, I'm talking probably almost the entirety of the S&P 500 up above what their averages are for where their price to earnings sit. But hey, this is just the market we're in right now. Things are moving in the right direction. The economic indicators are pushing in the right direction. The Dow Jones is already up 7% this year. It's on pace for the 6th best January in 68 years. S&P 500 up 7.5% this year. The markets in the United States and what are ostensibly the global markets when you talk about the S&P 500. I mean, you're listed. You're the S&P 500. You're there, right? That's where it's at. These companies are doing remarkable. So for everybody calling the top, trying to call the top, I seen a thing from Goldman. I was going to talk about the headlines. We can just talk about it right now because we're talking about the markets. But there was a thing from Goldman that came out on Monday where they said that the markets were it was a little unsettling to them. Irrational exuberance, I think, was the phrase that they used.
Yeah.
But they then also said that they didn't feel like things were out of control. They just thought that there was an extreme level of risk appetite from the retail investor all the way up to the institutional investor. But they still didn't say like, hey, pump the brakes and this is the end of it. They just said like, maybe what really came across, I think, in the small little snippet that it was that it might be a bit of a changing of the guard and that the markets are just a little bit different. Price to earnings may be a little bit higher from now on going forward. And we've said this before. We've said this in markets that were overbought and there were corrections for before. So before we get out in front of ourselves and stop remembering the past, and because you're doomed to repeat it if you don't remember,
you are,
that these markets have been like this before, where prices to earnings have been higher than averages, but they've usually been really sector related. It's been very sector heavy. Whatever's been running, and those sectors interrelated to those sectors that are running get high out in front of themselves. But a lot of the blue chip, really the stalwarts of the stock market still don't push those price to earnings averages out of the ballpark. But even those companies now are doing it. Even the Colgate Palmolives, the Procter and Gambles, they're out in front of themselves on the average too. I wonder if it isn't just a matter of the fact that we are now in a new era of the marketplace because everybody's become globally attached.
So this is like history then.
It could be.
Right.
You know, like we don't see, regardless of the brake pumping analogies that are out there for people trying to call tops, the numbers, economically, the fundamentals across the earnings, everything says that we're still solid. We might be pushing numbers high inter-week, but I don't think we're pushing numbers that are out of the realm of feasibility on an overall scale. I just don't think so. I think we're doing actually really well, and I think we're on pace. I think we're on pace to have another solid year. I could see things. I'm not calling the top here. Settle down. I could see things pulling back slightly from the run that we're on to start the year off. But I could still see a year where we're up double digits in the indexes.
Do you think it'd be like the same as last year?
No, it won't be as good.
That was an anomaly, huh?
Yeah, I think last year, even with the tax cuts and all the stuff that's really in favor of a lot of companies right now, and like some of the tax rates you're seeing for 2018, like companies are paying out. On these fourth quarter calls, a lot of companies you're seeing pay out 150, 200, 250 million in taxes that are hitting up their EPS for, 15, 20 cents, whatever it happens to be. So it's affecting them now, but they're getting corporate tax rate cuts like 10, 12% next year. So you're seeing that on the horizon, things are going to be really good, but I don't know if necessarily the analysts and the pricing where it's at isn't already kind of priced in.
Okay.
That's my concern, is that even really good news is going to push stuff to next stratosphere levels because the expectation of that next level is already kind of priced into the prices across all sectors, I think, to some extent. I don't think there's a lot of the big horses, the big horses that had big runs last year, Boeing, Caterpillar, those companies that are going to have those big runs again. They've kind of reached, I think, what is probably a top line number from them.
Okay.
But while the price to earnings is a little out of whack, I would say that top line number is still a number that they've probably deserved in and around there. I don't think we're way overbought. That's my opinion. So while people start to try to call the top, I'm not calling it. Dow, NASDAQ, S&P 500, all up, all 11 sectors in the S&P 500 up. You wanted to hear about Canada. Canada, we're a couple of weeks removed from earnings. I would hope that earnings start to drive the TSX up a little bit. TSX only up 0.2% on the year. Not great. For a country that should be coming back. Employment numbers are really good. Canada's we're having a tough time with NAFTA. There were meetings about NAFTA in Montreal this past week, but we're having a tough time with NAFTA. The United States is wrapped up in a lot of their own stuff. They had the government shut down, that they got resolved there early in the week. There's been, world leaders, economic leaders. Everybody's been over in Switzerland for Davos, for the World Economic Forum. So people are not focusing on NAFTA. Canada is, though, because Canada knows how much NAFTA is going to affect their bottom line, their GDP. Stocks are just responding in kind. Canada's in a bit of limbo. They rely a lot heavier on these trade agreements than countries like the United States do.
Oh, for sure.
The country like the United States taking a concession helping you out. On the other hand, Canada's getting a bit of a hand. It helps them. It benefits them because they have a lot more to bring in than to send out as far as imports, exports go. So it gives them more on the overall level benefit, making it an even playing field when it doesn't necessarily have to be. I think Canada is going to make some concessions to get this NAFTA agreement signed. It sounds like if they do sign it the way the U.S. is pushing for it, in 5 years there's going to be a clause that closes NAFTA out. That makes it then basically a null and void entity. So we're going to see if the U.S. gets that through. It sounds like one of the legacies I think Trump is trying to leave is NAFTA kind of being in the rearview mirror. And we'll see, but it's not helping the TSX. TSX closed 16,239, like I said, down 0.2% or up 0.2% year to date. Nothing substantial. No. It is not going great, even though Canada in and of itself seems to be doing relatively well. United States is doing really well, though.
They always seem to be doing really well.
Well, they've had a lot of hard years. If you're really hard up to make some money, you could just throw blind money at the S&P 500 right now. You could have been doing that for the last 24 months, if not longer, and just reaping it. But people are, chase Bitcoin or whatever.
I was going to say, people are chasing Bitcoin.
Yeah,
bro.
not this week. It's been slow this week.
Yeah. So what else has been going on in the economy?
So oil, $66.21 a barrel. That's definitely helping the economy along. Oil it's surprisingly, I mean, I'm not shocked. Like I've said before, I think this is kind of the landing spot for it. And I've heard a lot of analysts kind of concur. They feel like that $70 mark is probably the very top end for oil for the next couple of years or so at least. But I find it kind of astonishing that oil got up there so fast and there wasn't a pullback at all, and it's kind of just plateaued and sat down.
Stayed there, huh?
It's kind of sat down where it belongs, and I think this is kind of where it belongs. So I'd like to see it obviously cheaper at the retail level because I don't want to be paying for a bunch of fuel. I'd like to be, if it was free, that would be nice. But as a realist, when you look at it as a commodity, I think this type of pricing is much more realistic than the pricing we've seen in the last year, 18 months ago, right? So April futures for gold, $1,353. Again, gold right around that same number we were talking about last week. I think gold is in the right spot. Industrial production in the U.S. up 0.9% month over month. Initial jobless claims found itself at 220,000. Housing starts in the United States, 1.192 million. Permits, 1.3 million. So even with the starts only at 1.1, permits for the future, everybody's planning on building still.
That's good.
There's no issues out there as far as the builders go. Another great economic indicator that things are just going really well. They see a lot of promise out there in the future. They continue to go out and get the permits to keep building. And we know the builders, I mean, we've seen their earnings in the last earnings season and just doing great work across the country. There's nobody that's really being stifled at any of the major builders. Everybody seems to be growing at a really reasonable clip with the price of housing continuing to rise, and that's not really slowing them down with the amount of homes that are actually delivered. So that's doing really well. The U.S. dollar, though, took a bit of a hit this week. U.S. dollar is at the lowest level versus its peers in 3 years.
Oh.
They're not. That sounded like that might have.
No.
Cussing Anthony might have came out there for a second.
Didn't say nothing.
No. But yeah, the U.S. dollar. I mean, at the lowest level versus its peers in 3 years isn't necessarily the worst thing in the world. Gives the U.S. a little bit of buying power internally. It's not the worst thing. There's not a lot of people complaining out there about it. You are going to see it affect the bond market and stuff like that a little bit, but it's not probably anything to be too concerned about unless we see this as a trend pick up and the U.S. dollar keeps losing value.
I don't see that happening.
I don't see that happening. The economies are growing strong across the globe. So against whatever benchmark, whatever peer benchmark you're using against, the pound, the euro, whatever it happens to be, the U.S. dollar is going to be strong because the economies across the world are strong. And the United States is definitely leading the way, even though countries like China and Japan and Germany still continue to truck along at an amazing rate. They're not near on the level that the United States is. And when you're talking about a country like China, maybe on scale, they look like they're doing same kind of stuff, but they're not. They're definitely in preliminary stages of building still, compared to where the United States has had the same or similar infrastructure that China's putting up now for 20, 30 years already. There's a lot of catching up being done. So while China's still booming, when you look at it, the United States is now going to be redeveloping a lot of their engineering that they've got out there, stuff that's past their expiration date. The government's been talking about this for a while, whereas a country like China just first now laying those building blocks, bridges, dams, all that. A lot of stuff is still cities, period, just being built. So while you see that in like Caterpillar's numbers and stuff with machine sales over to Asia, it's different. So the United States still doing phenomenal. Like I said, a lot of people over at the World Economic Forum over in Davos, Switzerland. I got to see, I don't have a TV, but I got to see some of the CEOs that were over there talk about a whole bunch of different topics. There was nothing really overtly revealed. It was a lot of people just talking about the economic climate in the world, what they're hearing from their peers. But it was really interesting to be able to sit down and watch what is now a blur in my mind, but at the time was 30 or 40 CEOs over the course of 2 or 3 days. I just sat down in one lump sum and watched back to back 15-minute interviews across Bloomberg and CNBC and Fox Business. And it's nice to be able to hear from the horse's mouth.
For sure. Right?
Yeah, because you don't get as much CEO FaceTime as you'd like.
No, it's more like just like PR guys or whatever, right?
Yeah, you get a lot of news releases. You just don't get the same amount of that FaceTime. You want to see the confidence, the swagger. I want you to convince me. Whatever you're talking about, I want you to sell me on it. Make me believe. Like I want to see you believe. Yeah. If you've got to believe more than you're expecting me to believe. And you get that off some CEOs. Like there were a couple of guys that I really could have done without. I'm not going to say who I really didn't like as far as like just the demeanor and stuff.
Right.
But there were a couple where I watched them and I was sold.
Right.
They were selling me on a company where maybe
they believe in it.
Maybe my belief structure as to where their fundamentals are based on their industry or sector or whatever it is kind of laissez-faire, let's say. I'm middle grounding it, right? I was sort of convinced. I will admit I did check it. I'm not going to say who, but I did check 2 or 3 companies after watching all that stuff.
Of course you did.
Because I was a little overwhelmed with how well the CEO came across and just the way he laid out the company's plans. And it's all basic news. It's things everybody knows. There was no breaking news, but he and I say he because it was all 3. It was 3 guys. They just seemed so fluidly confident in what they were doing. It was tough to not kind of relish in it and be like, maybe you do have it all together. Maybe
that's why you are the CEO.
That's why you are the CEO, sir. So, like I said, NAFTA meetings continue in Montreal this week. Obviously, we've got nothing going on as far as a closure to that situation. U.S. government shutdown, though. We've got at least an extension into February as far as that goes. The House and the Senate reached an agreement just for everybody to get back to work. The International Monetary Fund has raised the international growth forecast so everywhere across the world to the highest in 7 years. So even the IMF thinks that things are going to continue to boom. Everything's working in the right directions.
Yeah, all the planets in the middle of the line.
It's all aligned. The celestial teacup or whatever it happens to be, flying spaghetti monster.
Whatever.
It's all working out to our advantage. You got to love it when the market's booming.
You have to, right?
Love it. Love it.
Love it. Let's hear about Bombardier and Boeing.
Yeah, well, okay, so we know they were all going to get back together here in the U.S. International Trade Commission was going to make a final decision. This is it. And I mean, we thought, right, like it was done. Boeing had won 292% were the tariffs that Bombardier was going to have to, or that whoever purchases any kind of Bombardier that imports anything was going to end up paying, bringing it into the U.S. Airbus got involved with the C-Series program, basically took over the entire thing. This was a wrap. Boeing,
it was a wrap.
Completely not a wrap.
No.
Everything reversed, no tariffs. Bombardier to Delta, 75 CS-100 planes for $5.6 billion. That's going to go through, it sounds like. Boeing has the right to appeal. Boeing thinks they might appeal, but they got so much going on.
Oh, yeah.
And they probably put a good scare in Bombardier. And now they got Airbus involved. Do you really want to continue to... Like, maybe it's better to just let it go, but I didn't think this was going to get reversed.
No.
This deal wasn't getting reversed to me. This was done. Boeing, the U.S. government had said, no dice. Bombardier, you keep your planes. Delta, pay 300%. No, that's happening.
What a plot twist.
What a plot twist, right?
Yeah.
Not too bad on a Friday. Pretty good plot twist. Friday was kind of calm for earnings. There wasn't a whole lot of news. That was a plot twist. So Bombardier, 75 planes to Delta could be being delivered sometime in 2018. It really all depends if Boeing decides to go ahead with the appeal. So, a little bit of Bombardier news. Bombardier jumped, 16% on Friday.
Oh, wow, there you go.
$3.65 a share. So that's big. That's a big move because there's a big sale, and this is getting in with one of the major U.S. carriers. If they can get their planes, these are mid-sized planes, if they can get these planes into circulation and find that Delta likes them, there's a lot of other airlines out there that if you start getting some good reviews on that scale, and this is their first big deal. So Bombardier is fingers crossed that Boeing leaves this alone. I'm sure the Canadian government, the Quebec government, that all got a bit of a stake in Bombardier, they're probably thinking the same thing too. Shareholders that have been sitting on this thing down at $1.50 or $2 or whatever it's been at, got to be kind of happy getting close to
for sure.
getting close to $4 now.
Definitely a story that we're going to probably keep following.
I mean, in Canada,
huge,
we want this company to do well industry-wise.
We do,
They employ a lot of Canadians, and while they do a lot of rail stuff. They do a lot of successful stuff around the world in the avenue of rail. A lot of rail cars. They do a lot of that stuff really, really well. The plane business has not near taken off, no pun intended, to the level that, I mean, they'll never be on Boeing or Airbus's level, but now with Airbus involved, Bombardier, no tariffs. That was a bombshell.
That was a bombshell.
How's that tricep?
Right now it's not too bad.
Not too bad. I'm keeping you nice and
tolerable.
distracted. Yeah. I brought a lot of energy.
You did. What about the Aurora Cannimed acquisition? That's pretty interesting.
So that's done. I mean, I guess that's done. We've been hearing. I mean, Cannimed has been complaining that they didn't want to go through with this, that it was too aggressive, that it wasn't worth it, that Aurora's share price was all built up on debt, that they were being undervalued. But there you go, 3.4 Aurora shares for every share of Cannimed, worth about $1.1 billion Canadian. That pretty much puts the New Strike deal that Cannimed had on the table out to pasture. That's over with now. So that's probably, I mean, that New Strike company was hanging on by a thread as it was. I can't imagine that's going to work out too well for them. There's a lot of debt being consolidated between Aurora and Cannimed.
Oh, yeah.
I mean, it's just that whole industry is being consolidated here slowly. I think this is going to be the first major domino to fall as you find a couple of the big companies, Afria, Canopy, start to scramble and try to consolidate even more. But I mean, I really don't know what to make of this as far as an investment perspective. I know what's going on. I don't know where things are headed, though. Right. It's way too difficult of a market as a burgeoning market, and with way too much erratic market behavior.
Oh, for sure, yeah.
All these acquisitions and hostile takeovers, and everybody's buying greenhouses and architecture firms, and everybody's spending all this debt money, and its prices are racing up, and price to earnings are just exorbitant. And I mean, are any of these companies going to get into other countries and be selling this dope to anybody else? Is this going to be the 30+ million that are here in Canada? Are they hoping everybody's going to start smoking an ounce a day?
You bring up a very good point. Who are they going to sell to besides Canada?
Prices are up high. So good story. It's I guess we get a little closure on what's been dragging on for a couple of months now.
Right.
Aurora gets their way. They end up paying a lot higher price than they thought they were going to pay. I'm sure Cannimed shareholders are at least hoping that the 3.4 shares instead of whatever it was, 2 point some shares, is going to hedge them in a little bit more if Aurora, falls off the board. But this puts Aurora pretty firmly in that top three as far as
sure,
So I mean, we'll see how this all plays out. But in industry, I am not. Everything that's normal is too good for abnormal investments.
Yeah, exactly.
Sorry, my friend. Have you seen that oil's $66 a barrel?
I hear Steve Wynn has got himself into a little bit of trouble.
Oh man. So he resigned as the RNC finance chair. I think that was this morning. Yeah, just sexual misconduct allegations. They had a really good earnings call. We're going to cover that. They had a good earnings call earlier this week.
That's good.
It was really good. Their stock got stomped on Friday, like 10 or 12% off this news.
Right.
It was a really good earnings call. You can throw out allegations all you want.
Yeah.
People get allegations thrown at them. It's kind of ridiculous, to be honest with you. Like, you are, as far as the media goes, you are guilty until proven innocent. They'll attach
for sure.
these words or phrases to your name that don't just get scrubbed away easily.
No.
They don't keep this under wraps. There's no way of kid gloving it or doing it the other way. They put your name and these really, really harsh taglines associated with your name in the names of sexual misconduct. Sure. And you're always thought of as that person now, even if this stuff comes back to being
innocent. You're innocent,
completely innocent.
Yeah, your name has been tarnished.
Yeah, and for someone the size, it was probably best for Wynn to just resign as the RNC finance chair and just say, I don't need this. I'm worth billions of dollars. Exactly. I don't need this nonsense. Like, I have such a, you'd have to be such a delinquent in your brain to be worth that kind of money and to be doing something outside of what you could get yourself anyways. Steve Wynn, he's worth billions of dollars.
I don't think he's having trouble.
I would imagine options are probably to his advantage.
Oh, for sure.
Not something where you have to forcibly go and push your limits or anyone else's limits. I'm not saying allegations are false. I'm just saying allegations are really damaging only in one direction. Because there's only one person probably in this allegation with much to lose.
Oh,
the
for sure.
The person on the other end becomes faceless unless they want to reveal themselves to make money or fame that way.
And it's probably to make money, right?
I'm not saying it is.
No, me
I'm
either.
not going to say
no.
it is. It could be, but it's, had good earnings earlier in the week. Wynn Resorts there took a bit of a beating at the end of the week. Steve Wynn probably going to do a little bit of chilling, go to Macau and hang out for a while.
Oh, for sure. Why not?
And not overthink this too much.
No.
Because, you see this too frequently now.
Oh, you do.
Yeah.
That's all you hear about in the news.
That's why I don't, I follow the stock market. I don't follow mainstream media news. I know that it took the share price down pretty considerably on Friday, and then to see him step down as the RNC Finance Chair today, I thought it was relevant news for us to put up there, publicly traded company.
Yeah.
But, a lot of salacious nonsense.
Oh, for sure.
Not into that. Living my own salacious lifestyle. Thank you very much. Thank you very much.
Toys R Us.
Toys are, we know they're in trouble.
We already knew that.
Bankruptcy protection, they are holding on by a thread. They're going to make it for another couple of years, but they are closing 175 of their U.S. stores.
That's right.
That is 20% almost of all the stores in the U.S. They got 800 and some. That is, I've expected. It was expected.
It was. For months now.
Toy industry is working on some serious consolidation. In fact, we found out, I think it was on Thursday, that Jack's Pacific actually has the Hong Kong Misheng Cultural Company looking to purchase 51% of Jack's Pacific for $2.95 a share. The Hong Kong Misheng Cultural Company already owns 18% of Jack's. So they're really trying to get a majority stake in this.
They are, definitely.
We've seen Mattel and Hasbro flirting with each other. Mattel's had a really rough time recently. The toy business is a dying business.
Unfortunately, it is.
It is not something to be invested in. Toys R Us, Mattel, Hasbro, Jack's Pacific, or otherwise. I wouldn't touch it with a 10-foot pole. But Toys R Us closing 175 of their stores. Probably some iconic stores people grew up with. Oh yeah,
childhood memories are disappearing. Probably.
You don't formulate childhood memories at a Home Depot, but you do.
No.
Well, you don't. There's one little Bob Vila kid out there that does.
For sure, yeah.
But the majority of kids and their parents remember things like those things.
Yeah.
So when they go away, it definitely. It gets you where it hurts a little bit.
Yeah.
A little bit.
Tugs at your heartstrings.
Tugs at the one string I have left there.
Apple had some good news. Interesting news.
Apple had a lot of news. So Apple shipped 29 million iPhone X units in Q4 of 2017. That's their Q1 actually of 2018. They've got their their fiscal year end a quarter off from the actual calendar. That's slightly below the expectations, but they found that the financing and trade-in programs, they haven't hurt the premium pricing of the iPhone X units at all as far as getting them into people's hands. One of their major suppliers, Foxconn, that makes a lot of the components inside there, might move an Apple department over to a Shanghai spin-off of Foxconn something or other. Some other Foxconn name.
Right, okay.
But so they're spinning off that business department. They're thinking about sending the Apple unit that works on a lot of the Apple products, because Foxconn and Apple do a lot of products together. They're thinking about sending that over to the Shanghai spin-off. So Apple, iPhone X doing well, a little below expectations, but they think the expectation miss is more to the fact that the 8 and the 8 Plus got released with a bit of a stagger before the iPhone X. And the expectations were set out before that stagger in the calendar was actually scheduled in there.
Right.
So I think they were expecting a little bit more. But like we said, premium pricing has not been affected. Financing and trade-in programs working out really well. The HomePod for Apple announced that it launches the 9th of February. Pre-orders are currently underway for the United States, United Kingdom, and Australia. Germany and France are coming out this spring. I don't know if Canada encompasses the US. Because Canada isn't mentioned when I read the press release.
Usually they would say North America,
you would
right?
think,
if it was
but then maybe Mexico not included. I don't know. They didn't mention Canada in the press release. So US, UK, Australia right now, $349. Germany and France coming in the spring.
Okay.
So there you go. Released on February 9th. iPhone X doing well. Apple doing
Apple's
phenomenal.
always doing pretty good,
phenomenal work over at Apple. We're going to see if they can catch up because they are behind. The Google Home and the Amazon Echo have made some serious market share dents in that home speaker industry. We're going to see just what kind of pressure Apple's going to put on. Apple apparently has really, really good sounding speakers. If you like music and stuff like that through your speaker system,
crystal clear, huh?
Apparently they sound phenomenal. One of the reasons why it was delayed a little bit, they wanted to make sure that quality was just perfect.
Yeah.
So we'll see how that quality transitions into getting back some market share where 100% of it is basically split between Google and Amazon at this point.
What else has happened in the market?
What else? Okay, let's... Bitcoin. So Bitcoin is what else? Bitcoin has done next to nothing, and cryptocurrencies basically move along in unison. So there's not a whole lot going on there. I believe 11 and a half, somewhere around there. It's just not doing much. We reached that top of 19 about, what was that, 6 weeks ago? We kind of called. We called the top. We called it.
We did.
I remember we called the top. We did a video on it.
Yeah.
We called it. I remember. Yeah, I didn't call the top. That was just a fluke. But yeah. Bitcoin down to around $11,000 a Bitcoin. Everything moves in unison in cryptocurrency. A lot of the chatter has quieted down considerably.
That's true.
I think a lot of people got shook. It jumped up so much, so fast. Everybody who got in 17, 18, 19 probably took a bludgeoning on the way down.
Oh, yeah.
And all of a sudden people are really rethinking how interesting cryptocurrencies are. Not blockchain technology, but cryptocurrencies. Facebook is going to have a data center that they are going to open in Atlanta. $42 billion.
Oh, wow.
This data center. This is going to be the biggest economic project in the history of the state of Georgia. So that's going to employ a lot of people. It is going to cover 416 acres across 2 parcels of land. You can only imagine that Facebook's going to be employing quite a few people from the state of the peach, the Georgia peach. Love a nice peach. Yeah.
Peach is good.
Biggest economic project in the history of Georgia, $42 billion for Facebook's data center. Google, speaking of, we were talking about home speakers actually with Apple. Google Home has 14 million units installed across America right now. Amazon with the Alexa has 31 million units installed.
Oh, wow, that's quite a few.
Amazon doubling up on Google, so far, and a lot of good reviews for the Echoes that are out there. So I haven't had a chance to actually try one myself, but they're well reviewed. So is the Google Home. Home Depot, $1,000 cash bonus to employees. They've got about $150 million in tax payments that's going to take effect in this next quarter that's going to be reported in a couple of weeks. Earnings per share are going to take a hit of about 19 cents. So you can expect to see that on the top line of Home Depot's next earnings call. SoftBank, they can't buy any more Sprint. That's it. SoftBank, a self-imposed limit of 85% of all of Sprint. They currently own 84.94%. They bought another 7.61 million shares in the last week.
Oh, wow.
If SoftBank cracks 85%, they have to purchase the entirety of Sprint. So they're pretty much topped out. The deal with T-Mobile didn't go through.
That's true.
So they are all in on Sprint.
So what do you think they're going to do? Do you think they might purchase it?
I think they're all in. Why else are they creeping into this number? I think they got a little over 1 million shares they could buy left.
That's what I was thinking.
To get it right to 85. Yeah, so they're creeping on it for a reason. They're doubling down on Sprint, right? They just made a big investment in Uber. They're doubling down on Sprint. SoftBank knows what they're doing. Sprint not doing so well in and of itself, but turnarounds for a telecom company can happen in a matter of a couple of years.
Oh, for sure.
Yeah, and Sprint, just like the AT&Ts and Verizons of the world, always looking for any kind of merger acquisition potential that's out there as we see media and telecom getting more and more melded together. So I can only imagine SoftBank hedging their bets, buying up one of the biggest U.S. carriers that are out there, number 3 in Sprint.
Yep.
And Sprint is definitely probably closer to than further away from an actual acquisition taking place and getting into some major media as opposed to just the telecom business. So SoftBank, just tripling down.
Tripling
down. They must like sprint. They like it more than I do because I'm not in on sprint. So Boeing has finished testing the 787-10 Dreamliners with the Rolls-Royce engines. Those are ready to go, ready to start being delivered. The Rolls-Royce engine has passed all of Boeing's strenuous safety tests. They're not finished, though, but they're getting close to finishing with the GE engines that are also in the 787-10 Dreamliners. Just about finished with GE, but done with Rolls-Royce. They had no problems there whatsoever. So they are going ahead with both of those engines, it looks like.
Yeah.
But GE still has a couple of hurdles to pass, a couple more hours logged in the sky, I would imagine, is what it's going to end up being. Google, they're getting in the audiobook business. They're getting back in the audiobook business.
I think so, yeah.
Yeah, so through the Google Home, it doesn't offer Audible. You can't listen to books on tape through Audible, and Audible's the biggest book on tape company in the world, and they're owned by Amazon. So Google's trying to take market share from Amazon. So Amazon, you can get it through Echo, right? You can listen to Audible, and Audible, really great program, just $15 a month or whatever. So Google's going to get into the audiobook business and do their own stuff through the Google Home. So, man, Google and Amazon are going head to head in a lot of stuff.
Oh, they're competing.
There's a lot of competition there. It is getting tooth and nail there. They're going in a couple different directions at each other. Disney, same thing with the bonuses, just like with Home Depot, 125,000 employees getting $1,000 bonuses, 50 million new dollars being put into education programs for people looking to upgrade that are part of the Disney family. I think 88,000 employees qualify for the education, the actual bursaries or whatever you want to call it that are out there to further your education when you work at Disney. So Disney doing a great job putting some of that money back, even though their share price wasn't up considerably in 2017. Clearly, they're getting a pretty good tax benefit. And the companies that are getting these tax benefits are doing a good job of showing it to people and letting everybody know that they're actually going to do something with this to help their employees right now. I know a lot of companies actually gave the employees the bonuses right before Christmas. Checks cleared. We're in there right before Christmas. You know, $1,000 you didn't know you were going to get all of a sudden. So, I mean, even now to be getting it in January or whatever
when you really need it too.
Oh, yeah. You'll take it. You'll
definitely take it.
Good on these companies for spreading the wealth around.
Yeah. Is there any other stories? Yeah.
Okay. I was taking a drink. You're peer pressuring me, bro. Qualcomm got fined by the EU $1.2 billion. Apparently, Qualcomm was paying Apple billions of dollars US for Apple to choose Qualcomm as opposed to any other semiconductor companies.
So like a bribe?
$1.2 billion fine. The fine could have been up to $2 billion, but $1.2 billion is still a stiff fine. So bribe is, I didn't see bribe used in the final verdict as a word, but bribe is a word that comes to mind.
Definitely came to mind,
GNC has come out with some new weight management supplements trying to save their life. I would imagine that anybody out there that's gullible looking to lose a little bit of weight, GNC is going to do everything they can on their last leg to try to market this stuff as a winner, to try to save that company that's a sinking ship. I would stay away from that stock. I would stay away from any bonds they happen to issue, any kind of debt. And I would not waste my time with any weight management supplements that GNC's selling, because the only way to lose weight is to burn more calories than you take in. It's simple thermogenesis. If you want to burn more, you got to basically raise your body temperature. There's nothing else you can do. Yohimbine, DNP.
Calories in, calories out.
Clenbuterol. I mean, that's about it. You got to raise your internal body temperature through exercise or through artificial means. And you have to take in less calories. You don't need a weight management supplement from a company that's...
Well, if you're not into weight management, you can always get a test booster from them.
Don't do it.
Don't do it.
Don't go to GNC. Don't waste your money there. Don't invest in that stock. I put that on there exclusively as a disclaimer to run for the hills. I saw that Planet Fitness moved into Mexico last week.
Oh, really?
Don't make any noises in that gym. You'll get thrown out. It's a sanctuary to the iron.
Apparently.
Don't make any noise. GNC on their absolute last legs. new weight management supplements not going to save the company. That's not a company worth being invested in. I just wanted to clear that up in case there was any confusion. GE removed $1.7 billion in structural costs in 2017 from the company. $1 billion was the estimate, so they way outpaced what their own estimate was. $2 billion in structural costs should be removed in 2018. They're already at 1.7. They should cross that $2 billion mark relatively easily. Lennar, the home builder in the U.S.,
yes, Lennar,
is investing in an online home trade-in startup, like how you trade in your car.
Really? Okay.
So it's $100 million that Lennar's invested in this venture capital firm of $135 million total. They've got a pilot running in Vegas, program running. So what you do is you upload your house to the program.
Yeah.
And within, I think they said like 24 hours, you get a bid on what they'll pay for your house. So I guess it's quick turnaround time if you're looking to get out of some property and you're not really worried about getting top end market, and you've got a company like Lennar or somebody that'll sit on a house for 6 months and they don't mind carrying the costs as long as they can sell it for what the high end of the retail price is. Okay. They'll underbid you. You get cash now, and it's all contingent on people going in afterwards doing the home inspection. It's a contingency on a few other things, but the bid still comes in really quick based on you just uploading some pictures and stuff. So that's just an interesting little twist on the housing market.
Very interesting. I thought maybe it was like you trade in your house towards like you get credit for buying a house from them or something like that.
I don't see why that would.
You probably could do that.
Yeah,
I didn't know they're actually going to give you like cash for it.
No, I would absolutely see that as probably being a potential as well, though, right? Like, it's just like trading in your car would be like trading in your house.
Yeah.
So who knows? Maybe it's not a matter of getting the cash. Maybe it's a matter of in that short period of time you get what their perceived value is, and get it. Maybe it is exclusively in a trade for one for house. Yeah, might very well be. It wasn't clarified in the press release, but a very interesting twist on the housing market. Don't really see that.
That's kind of history right there.
$100 million investment by Lennar. That's a pretty big investment. Pilot project currently running in Vegas. So I mean, if you're in Vegas, check it out.
For sure.
Go on there, go on the website, check it out, download the program, see how it works, see what they'll tell you about your house or houses in your neighborhood.
Yeah.
Right? You'll know what your properties are worth, so compare it. I mean, are they undervaluing things by 25% or are you getting pretty fair market value for things, right? So EA, the multiplayer action game that EA is developing with BioWare that was supposed to be released in the fall of 2018, Anthem,
that's right,
has been delayed to early 2019.
Yes, it has.
So EA is giving BioWare a deadline, I believe, of March 31st. It can be no later than. But this hit EA shares a little bit as they've also had some delays on a few other things recently.
Yes.
EA, for as well as Take-Two and Activision Blizzard are doing, EA has not been doing near as well, even though there is some actual decent news in regards to EA in what could be some of the biggest partnerships of major conglomerates that could take place in an industry that I love. So while we have a little bit of bad EA news with Anthem being delayed a little bit, BioWare, that's an Edmonton company.
That is.
Yeah, I don't know if it's an Edmonton studio actually doing the game.
No, I think it is.
It is the Edmonton studio.
I'm pretty sure it's the Edmonton studio.
Hometown champs, baby. Woo! Actually delayed, so not really champs. Yeah. Step your game up. My peer group, we're disappointed. You're bringing us down. So one of the biggest, I think, partnerships that could be out there, Disney and ESPN, so the same company, but major media outlets, right? Major, have partnered up with EA and the NFL to be the exclusive broadcaster of Madden's NFL Ultimate League 18, the EA Sports video game, NFL Madden. So, I mean, we've talked about ESPN and Disney getting into streaming. We've talked about esports taking off on a mass level. You've got the NFL and EA involved now with Disney and ESPN. You've got streaming coming soon. You know, Disney just bought a bunch of video game companies or sold off licenses to video game companies.
That's right, they have,
At what point in time do you think that Disney and ESPN are starting to consider that on these streaming sites that they're going to have live esports? Because that's what this looks like to me.
It's a little tester.
There is a bit of them getting involved with other companies to make games as far as Disney goes. They're with EA now and the NFL here to broadcast.
Yep.
It's only a matter of time.
It is.
I've been saying esports, man. I've been all over this. I'm not a video gamer. You're not going to catch me watching entertainment type television,
No.
but I know what attracts the masses. And like moths to flames, you see people go to video games.
Oh, definitely.
And for whatever reason, I just care about the money reason. Whatever reason you go over there, if that can be monetized, and it clearly can be because there's eyeballs on it, that's where the money's going to be in the future as far as media goes. And I can see it all kind of coming together. Obviously, Disney, ESPN can see it coming together too.
Yes.
They're exclusive broadcasters of the league just this year. So I don't know if EA and the NFL didn't want to sign a longer broadcast deal, or if Disney didn't want to, or if maybe they're waiting to have this year to work together so Disney can sign an exclusive deal through the streaming service for a 10-year duration or something. Who knows? But there's something in the works. When companies that big can all get together, that's big news in a marketplace that's just taking off. The WWE, Vince McMahon is starting a football league.
He is.
He is. He took out the $100 million in shares. He trademarked the name XFL. It's ridiculous. If I was a shareholder of the WWE, as every time he's done this, restaurant, football league before, the WBF, the World Bodybuilding Federation, every time he's done this, he takes his attention away from what makes him the money. If I was a shareholder of the WWE, I would be up in arms about the guy who, if you know anything about wrestling, is known across the industry as the last say. There's nothing that goes on TV that he doesn't okay. Do you want his attention elsewhere? Because
probably not, no.
As of right now, the wrestling industry as a whole barely hangs on, but you then have him as an entertainment brand that isn't really in the greatest of positions either. So I think if he's taking his attention now away to follow what obviously is a bit of a dream of his, as you can tell by how much he pursues it, to be in the football business, as a WWE shareholder, I would be very, very trepidatious.
Oh, yeah.
Samsung Galaxy S9 launches on February 25th. That's that. Take that. I will probably be getting a new phone. Tesla, the Model 3 delays that we've been hearing about, which Tesla denies, but the delays are out there. Battery production issues at Nevada's Gigafactory. Apparently, the delays are so bad that they've got some of their technicians building the batteries by hand.
Wow.
They deny it. Tesla denies this, but that apparently is what's going on. And the final headline, Lowe's greenlights another $5 billion stock buyback plan. They still got $2.1 billion left in the previous buyback plan. That's $7.1 billion in buybacks that Lowe's is probably going to be making over the next 18 months.
Yep.
Share price up 16% already on the year. So Lowe's, if they're buying it back at a premium like that, clearly believe in the future.
Yeah,
we know that Amazon isn't encroaching on Home Depot or Lowe's.
No.
It's a two-horse race in the major home builder space.
Right. Yeah, definitely. I wonder if Amazon will ever get into that kind of stuff, or I think that might just be like a retail type of thing.
Yeah, I think it's got to be at point of sale. It's got to be a point of sale thing. Too. Just too much shipping, the logistics, too much opportunity for error on 100 count of this that needs to be cut at this specific dimension. You can't have that first thing tested and checked. Yep, that's right, and then carry on. Yeah. I think that still needs to be something where you've got someone kind of at that point of sale at this point.
Yes.
Who knows how things change in the future as robots take over our planet.
Yeah, that's the next step. Anyways, we have earnings.
Okay.
Earnings.
So you want to do this? You read the earnings because there are so many of them. There are 31. If you, we're 48 minutes in. If you would like to take a break, I will play a little mariachi music while you go and get yourself a drink of water because earnings season is in full swing and we've got 31 earnings calls. So, are you ready? Did you get yourself some water?
Popcorn.
Are you ready? Are you ready for earnings?
Let's do this.
You want me to should I just hammer through this?
Just hammer
I won't even talk to you.
No,
it's
just
like
hammer
you
it.
don't even exist. Earnings started off on a Monday morning. Funny enough, the first trading morning of the week, a Monday. It was a beautiful Monday. I don't remember. I don't work Mondays. I might have still been sleeping Monday morning. Earnings from Halliburton. Earnings per share of 53 cents beat the street by 7 cents. Revenues of $5.94 billion beat the street by $310 million. That revenue number for Halliburton is up 47.8%. Halliburton closed the week at 55.61. The price to earnings at Halliburton is very high, but forecasting for 2018 growth of oil at around $60 a barrel would bring the price to earnings for Halliburton next year down to about 17.5. So don't read too much into that trailing price to earnings number. Essentially, everything that Halliburton has in stock in regards to their fracking fleet is currently sold out. Everything's in the field, despite less overall oil field equipment being used compared to Halliburton's peak in 2014. Revenue is highly correlated to oil prices over at Halliburton, so we know Halliburton is going to be doing quite a bit better, as you can see by being up 47.8% year over year, as the oil price is up to $66 a barrel. Increased sales in 2017 by 30% to $21 billion at Halliburton. Completion and production had 47% revenue growth in quarter four. Drilling and evaluation had 7.7% revenue growth in quarter four. Halliburton, with the oil field picking back up, is looking like a very, very strong company. Like I said, that price to earnings, though, can be a little scary, but you can expect if oil stays strong, Halliburton's revenues are going to continue to go up. That fracking fleet entirely utilized out in the oil field right now. Wynn Resorts, our friend with the issue, Steve with the greasy fingers, Steve. Keep your hands in your pockets, Steve. Earnings per share of $1.40. That beat the street by 2 cents. Revenues of $1.69 billion. Beat the street by $120 million. That number is up 30% in revenue year over year. The Wynn Resorts closed the week at $180.29. Again, that pulled back about 10-12% to close the week. Not the nicest pullback, even though this earnings call is actually really good. Price to earnings of $27.59 trailing. That revenue growth of plus 30% was largely attributed to $248 million made by the Wynn Palace in Macau. That seems to be making great headway as it's becoming quite the resort destination. Las Vegas revenue was down 1.6% for the Wynn Resorts. They've got $3.13 billion in cash on hand and $9.63 billion in debt. Wynn West is currently being built on the north side of the Vegas Strip, 2,000 to 3,000 rooms. It will connect the Encore, the beach resort of the Encore, and the Wynn Las Vegas through an air-conditioned bridge. The Wynn Boston Harbor, which cost $2.4 billion to build, is ready to open in spring of 2019. The Wynn Resorts family is doing excellent as far as expanding the portfolio. They're a fantastic company, but they've got busy hands. Mr. Wynn needs to just pare it back a little bit, Chief.
Wear some mittens.
That's right. Yeah. Again, great earnings this week. I expect more of the same next week. Netflix, earnings per share of 41 cents came in line with the street. Revenues of $3.29 billion, beat the street by $10 million. That revenue number is up 32.7%. Netflix closed the week at $274.60, a price to earnings of $215. $215 price to earnings. Netflix, you are expensive. I was not in Netflix on none of the run up, and I've been terrified of it ever since. The price to earnings has always been like, it's next level price. Like it looks like a misprint. You look at it and you're like, that can't be right. That can't be right. 1.98 million domestic additions. That beats the estimates of 1.29 and the guidance of 1.25 considerably, 1.98. people wonder how much the additions really are affected by password sharing and how much those additions might not be up even more if password sharing wasn't an issue, but still destroying estimates and guidance. 6.36 million international additions. That beat estimates and guidance that were both at 5.05 million. So that beat it by well over a million.
Oh, yeah, for sure.
Yeah, Netflix is growing ridiculously. They plan to spend, because they've had so many extra additions that even they weren't planning for, they've upped the spending on new content to 7.5 to 8 billion next year. That number's raised, like I said, the additions keep growing. They just keep raising the capital expenditures, right? They're going to continue to bring in content. They've got a $39 million write-down on future projects. That is speculated to be a lot to do with the House of Cards series, basically having to pull the plug on that, whatever was owing, money that's outstanding to people that they'd rented, this and that, and plans and all that. So $39 million write-down there on future projects, in quotation marks.
They do have one thing I want to check out, is the Nightmare on Elm Street series that they're doing.
They've got a Nightmare on Elm Street series?
Yeah, there's a trailer out.
Actually Freddy?
It's Freddy Krueger, but it's not Robert Englund. I'm pretty sure it's not. I just seen a little snippet of it today.
You remember that Nightmare on Elm Street show that was like in the late 80s on HBO?
Yeah.
But it was only Freddy at like the beginning. He was doing like the intro.
Telling the stories, kind of like Tales from the Crypt kind of thing.
Yeah, but
there was a couple episodes where he did come in and he did kill somebody.
Nice.
But it's, Freddy's Nightmares.
Freddy's Nightmares, was what it was called, yeah. So it's good. Freddy's actually on a show.
Yeah.
It's not going to ever be... I mean, Robert Englund's got to be, in his 70s now?
I think he is 70-something.
Yeah. He was excellent.
Excellent.
Yeah, Freddy Krueger's awesome. Logitech, earnings per share of 65 cents, beat the street by 7 cents. Revenues of $812 million, beat the street by just under $58 million. That revenue number up 21.8% year over year. Have you noticed a trend that everything's up double-digit revenue numbers year over year? It's pretty astonishing.
It is.
You tell me that this market's going to pull back, and I will ask you how. Other than a correction because of some geopolitical event or something,
that's very true.
I can't see it, because every different industry, it doesn't make a difference. There seems to be money there, and money growing on an exponential level, and the money seems to be there like at a global scale. Yeah. I just don't see it.
No,
I don't see it. 2018, maybe not as prosperous as 2017, but 2018 shaping up to be
pretty good.
Yeah. So anyways, Logitech closed the week at 43.38, price to earnings of 35.47, kind of a high price to earnings there. Even though it's a tech company, it's not really tech in the same kind of same vein. They raised their full year 2018 guidance, $564 million in cash, $823 million in debt, so they're not a very debt-heavy company at all. Citigroup raised their price target by 13% to $47. Sales of Bluetooth speakers, mice, headsets, all doing very, very well over at Logitech. Logitech is happy with the way things are moving along, not carrying a lot of debt, price to earnings a little bit high. But in a market like this, like I said, price to earnings being high might just be the way things work from now on.
That is very true,
yeah. Capital One, earnings per share of $1.62, beat the street by 26 cents. Revenues of $7.04 billion, beat the street by 60 million. That's up 6.8% year over year. A $1.77 billion tax charge. Oh, no, I was wondering about that. Earnings per share was a miss by 26 cents. I was wondering why I have that written down there that way. Earnings per share was a miss. There was a heavy tax charge on Capital One, $1.77 billion tax charge. They took it in this quarter, so the next quarter you're not going to see it because they've got a much better tax rate going into next year. They took the charge this year, the Job Act, and obviously the corporate tax restructuring.
Right.
So they took that log, 26 cents. It would have been considerably higher, would have been a beat, they said, but it ended up costing them quite a bit as far as the top line number goes. Domestic card loans up 8%, domestic auto loans up 2%, credit loss provisions, that's what they're expecting as far as delinquent debt goes. That was up 5%. So they're expecting some delinquency coming up. Credit card companies, you got to imagine as money starts flowing out there, that's the one concern is people like to really spend outside their means.
People don't like to
people are happy spenders, filling a void or something. Capital One into the week at $104.90, price to earnings of around 30, so not the worst, but still not the best of breed as far as investing in the financial sector. Canadian National Railway, that's the choo-choo trains up here that always slow us down by your house. $1.20 a share, missed by 3 cents, $3.29 billion in revenue, beat by $10 million. That's only up 2.2%, which is not great for how much we've been hearing things have been moving around by rail. And some of the other rail companies that reported this past week had some good numbers as far as volume, and actually some had some really bad numbers as far as volume. So you're really wondering if it's like region specific, because I mean, we know what sectors are shipping stuff really well, and we know that sectors like agriculture and stuff are down a little bit. So I'm wondering if it's not just region specific, and people who happen to have tracks going through certain areas happen to be doing a little better than people who don't have tracks going through those areas.
Could be.
Because as far as I can tell, it's been hit and miss with all the rail. 3 rail companies reported this week, a little bit hit and miss. Up here in Canada, though, Canadian National Railway, it was a fairly tepid growth quarter. 79.23 they closed the week at. They raised the quarterly dividend 10%. Operating cost revenue ratio was lower than last year, so that's always nice. Issued below consensus 2018 guidance. Obviously, we don't want to see that. $3.2 billion in 2018 capital spending program because they've got the money. $700 million on increased capacity. They're buying 60 new locomotives. They're doing some track expansion, some terminal improvements. So while they're not growing at a crazy rate, we don't expect that. They're a railroad company. We just don't see the revenue number jump. I think I'd like to see, as we know that shipping for a lot of things intercontinentally has picked up. I'd like to see that number up a little higher revenue-wise. It's not there yet, but we're seeing them spending a lot of money in CapEx, knowing that obviously going forward, there is going to be growth, and they're probably just trying to be on the front lines of it. Canadian National Railway, not something I own. Still not a bad company up here in Canada. Texas Instruments, earnings per share of $1.09. That was in line with the street. Revenue of $3.75 billion. Beat the street by $10 million. That number's up 10% year over year. Closed the week at $113.69. A price to earnings of just over 30. Again, that's a trailing price to earnings. Their analog division up 11% year over year. Embedded processing up 20%. Other, who knows what that is? That could be anything. Down 16%. They got a tax rate drop from 31% in 2017 down to 18% in 2019. It's going to be 23%, I believe, next year. So in the next two years from now, or a year and a half from now, their tax rate is going to be almost halved.
Wow.
From what it was last year. So pretty good for Texas Instruments. Good deal for them. And as the semiconductor industry just continues to build upon itself with autonomous vehicles and virtual reality, and I mean all the different ways that semiconductors are going, and then to have a company like that that's going to get such good tax legislation in their favor, Texas Instruments could be somebody to watch in an industry of semiconductor companies worth watching. Little drink of that Monster, who didn't report earnings today. Johnson & Johnson, earnings per share of $1.74, beat the street by 2 cents. Revenues of $20.2 billion, beat the street by $130 million. That number's up 11.5% year over year. They've got a $10.71 billion tax charge from repatriating a bunch of money. Johnson & Johnson's share price closed the week at $145.33. Price to earnings way out to lunch. Consumer segment up 3.1%. Pharmaceutical segment up 17.6%. Medical devices up 8.3%. Sales by business, baby care down 0.6%. Beauty up 4.4%. Oral care down 1%. Women's health down 0.8%. Immunology up 5.1%. Infectious diseases, I hope they're not getting them on a 5.1% increased clip. Neuroscience is up 3.7%. Oncology up 39.5% as Johnson & Johnson continues to push into the oncology department. Cardiovascular up 1.2%. Johnson & Johnson, other than the baby care and women's health, we don't see any misses. Everything on every level, pharmaceutical-wise, down, is doing great. Price to earnings is terrifyingly high. They haven't had a 4% share drop this week it dropped 4%. It was the first time since March of 2009.
Oh, wow, really?
So you talk about one of the strong companies that get underlooked.
Yeah.
It sounds so boring to own Johnson & Johnson.
I didn't know they had so many different departments that they're in.
Yeah, well, they just...
I didn't know that.
They're one of those... you start talking about these companies, the Johnson & Johnsons, the Intels, the IBMs. Right. There's some companies that are 3M or Honeywell. There's companies that have so many segments that it's impossible for them to break them down on more than a macro level. If you were to break them down in such a micro level, you'd be looking at companies that do everything from put things into spaceships to fix elevators and everything in between, right? So like some of these companies have just conglomerated so many divisions and other companies over years that they just, Johnson & Johnson does so much stuff right.
So much,
They're not just making baby oil. Even though I look good covered in baby oil, they do everything really, really well. But it's boring to own. Yeah, nothing too exciting because everything's already laid out. Hasn't had a 4% share price drop since March of 2009 in one day. Yeah. But boring to own. Yeah. No consistency. That's what I like. Yes. You can set your watch to consistency. Yeah. Erratic stuff is fine. I expect to be here for the duration. I like companies that's growth is sustainable over duration as well. Oh yeah. Johnson & Johnson. Good company. Procter & Gamble earnings per share of $1.19 beat the street by 5 cents. This is the world's largest consumer goods company, obviously. Revenues of $17.4 billion in that quarter was in line. Good guess, analyst. $17.4 billion. That revenue number up 3.2% year over year. Procter & Gamble closed the week at $87.73. Price to earnings of 23.6. Organic sales were up 2% versus the estimate of 1.8. They reduced prices on shaving products as they're having a tough time. Unilever's Dollar Shave Club is putting a real beating on Gillette right now. Right. So Procter & Gamble have lowered the prices on the Gillette shaving products, trying to get people back into the Procter & Gamble fold. They also released a press release that they don't want you eating the Tide Pods. Don't eat the Tide Pods. Some of the sectors or the divisions or brands that are doing really well over at Procter & Gamble is Olay, the skincare product, Oral-B, and Vicks. We're having a bit of a cold and flu season, so Vicks is selling at a much higher clip than it normally is. That's very true. In the States, it's pretty bad down there. You know who reported earnings on Tuesday afternoon? Who? Your favorite telecom company. Is that Verizon? Verizon reported earnings. 86 cents a share. That missed by 2 cents. Tisk to your favorite telecom company. Revenues of $33.96 billion. That's a chunk of change for a quarter. Beat the street by $700 million. That revenue number is up 5% year over year. Verizon closed the week at $54.72 with a price to earnings that's fairly decent, to be honest with you. Verizon might be a company worth taking a look at if you're not in the telecom sector. Just saying, as we know, Verizon is definitely making a push to be the first guys to get into 5G. But before we even get into that, 1.2 million retail postpaid net subscribers added, a large amount of spectrum. Less than half of it is used so far for the 4G networks, the LTE networks. Verizon owns a lot of spectrum. In fact, Verizon sells some of its spectrum off to Comcast. Oh, do they? Comcast has a cell phone company called Xfinity. They work through the Verizon network. Not very big. I believe they have like 350,000 customers, but it's growing. And it's Comcast trying to get into telecom, but Verizon, they own a lot of spectrum, which is basically satellite signal in the sky. A lot of room for that 5G network to grow. Just saying. Churn rate down to 1.19% versus 1.28% last year. Churn rate means the amount of people that are leaving your company, the amount of people leaving subscribership. So we want to see that number down. Capital spending of $17 to $17.8 billion, including a commercial 5G launch next year in the United States. That's pretty impressive. Verizon 5G. That's That's calling all backup for Sprint and T-Mobile and AT&T. Sprint is working on 5G too. Sprint is going to be there pretty quick, maybe calendar year 2018, but Verizon is going to be there for sure.
Smashing it.
Kimberly Clark, earnings per share. You love Verizon.
I do.
Kimberly Clark, earnings per share. They make toilet paper, Kimberly Clark. Did you know that?
I did not.
The softest of toilet paper.
Really?
Oh, my God.
It's like cashmere.
It's like triple plied. It's beautiful. It's unbelievable. Earnings per share of $1.57 beat the street by 2 cents. Revenues of $4.58 billion, missed by $20 million. That revenue number up 0.9% year over year. You're selling butt wipe. I mean, you're not going to sell. You know how many butts there are to wipe. You can project these numbers way out in front.
Can.
Kimberly Clark closed the week at $122.23, price to earnings of 19. The company cost saving initiative of $1.5 billion over 4 years of improving productivity, optimizing raw material, product design costs, and improving distribution efficiencies is in full swing. Workforce reductions of about 5,000, which is about 12 to 13% of all employees, is going to be taking place as that cost savings initiative unfolds. Organic sales were down 1% at Kimberly Clark in this quarter. North American consumer product organic sales down 3%. Developing and emerging market organic sales, though, up 4%. That's definitely helping them out on that revenue number. Segment revenue, personal care up 1%, consumer tissue down 1%, and professional up 3%. Segment profit, though, unfortunately, down personal care 2%, down consumer tissue 13%, and up 3% in professional. Segment profit down 13%, even though the revenue only down 1%, means the costs are getting a lot higher too. That's something to watch out for.
Right.
Kimberly Clark trading near where I'd be comfortable with it. Good dividend payer, strong company, really own kind of that market space. But to see organic sales coming down in the U.S., to see organic sales to see the actual margins coming down. I know there's growth across the world and stuff like that. Laying off employees sounds great as a cost-saving initiative when you word it that way, but a lot of times you're firing people because you just need to fire them because you're not making enough money.
Exactly.
So, United Technologies. So we're getting into the big defense companies. They all reported earnings this week, except for Lockheed. That's next week. United Technologies earnings per share of $1.60 beat the street by 4 cents. Revenues of $15.68 billion beat the street by $280 million. That number was up 7% year over year. They closed the week at $137.98, price to earnings of 21. Sales by segment. So Otis up 6%. That's their elevators division. UTC climate control and security. That's up 6%. Pratt and Whitney making engines and all sorts of good stuff. That's up 12%. And the UTC aerospace division up 6%. Up across the divisions. Repatriating $2 billion in cash. Waiting on government approval of the Rockwell Collins buyout, which is obviously going to help them going further. They don't have the Rockwell Collins stuff, obviously, in any of this earnings call. And they raised the dividend every year for 20 years plus, and they raised it again.
Oh, nice.
20 years plus, United Technology, strong.
Very strong, sounds like.
Tough to not like ETX.
Numbers don't lie, right? No.
Novartis. Big pharmaceutical company, earnings per share of $1.21 beat the street by 2 cents. Revenues of $12.92 billion beat the street by $130 million, and that number is up 4.9% year over year, closing the week at $93.91 with a price to earnings of just over 28. Innovative Medicines up 5.8%. Sandoz down, which is one of their big sellers, down 0.4%. Alcon, another one of the big sellers, up 8.3% in sales.
Not too bad.
You want to keep going? Because there are a lot more.
There are.
There is pages upon pages of earnings calls. Should we take another mariachi break for the fans?
I think we should.
Do you want me to just hammer through? What if I get through Wednesday or just talk like this, where we kind of just allow open windows of time for people to get to their respective fridges, fill up a little ice water, or it's Sunday night, have yourself a brandy if you like, and I'll slowly stretch and get into Comcast earnings from Wednesday. No. Okay.
Let's talk about it.
Comcast EPS 49 cents, beat the street by 2 cents. Revenues of $21.92 billion, beat the street by $100 million. Comcast revenue number up 4.3% year over year. Closed the week at $42.80. Price to earnings just over 20. Comcast lost 33,000 video subscribers in Q4. That's versus losing 48,000 was the estimate. So they're losing less video subscribers when we know people are just moving away from that type of media. Yeah. That's the way that works. That's why Comcast, like I was saying, got into the cell phone stuff that they've got through Verizon. Internet high-speed ads of 350,000 versus 309,000 was the estimate. Q4 dividends paid out of $736 million. They increased it by 21%. Q4 buybacks of $1.2 billion, $5 billion in buybacks expected in 2018. A 2018 tax rate of 24 to 26%, still a little bit on the high side for Comcast. And like I was saying, Xfinity added 187,000 customers to bring them to about 350,000. Yep. Not very big, but there's helping to make up for all the lost video subscribers. So getting into the cell phone business is Comcast. Abbott Laboratories. So that's Abbott Labs, AbbVie, the two different companies now, right? Abbott Labs is the old pharmaceutical company, medical devices, all that. AbbVie is the much more the front lines, discovering the actual drugs.
Yeah, like the R&D.
They doing a lot more of the on the ground dirty work. So Abbott Labs, EPS 74 cents, beat the street by 1 cent. Revenue of $7.59 billion, beat the street by $200 million, up 42.4% in revenue year over year. That is a serious revenue boost, but that was because they added on St. Jude and Lear, both in the same year. St. Jude, the addition, made them a major player in medical devices. Lear, a major player in diagnostics, both big company pickups for Abbott Labs. Abbott Labs closed the week at 63.42. The nutrition department had small single-digit sales growth. Diagnostics up 7%. Established pharma was in double-digit sales growth. Medical devices at 10% growth. Net sales up 42.3%. Like I was saying, the addition of St. Jude and Lear were big acquisitions. The St. Jude addition has made Abbott a major player in the $30 billion cardiovascular device market. So Abbott loves these pickups. They paid a hefty price for them, but they brought them in for a purpose. They are definitely one of the big pharmaceutical companies, medical players in the world. Good earnings call. Norfolk Southern, another one of the rail companies like I was talking about. Earnings per share, $1.69, beat the street by 12 cents. Revenue of $2.67 billion, beat the street by 20 million. That revenue number, as opposed to CN, up 7.2% year over year. Norfolk Southern closed the week at $150.97 with a price to earnings just above 8. They've got strength in coal, merchandise, and intermodal commodity expenses up 2%. Norfolk Southern is shipping much more than CN or much more than another rail company we're going to cover in a little bit. Ford had an EPS of 39 cents that was in line with the street. Revenues of $41.3 billion, beat the street by $4.31 billion. That number is up 6.7% year over year. Ford closed the week at $11.65. Price to earnings of 6.13. Price to book of 1.35. Ford trading in the middle part of their 52-week range. Ford is a buy. Just saying. Want a little bit of free information? If you've made it through this many earnings calls, I'll drop this right on the table right now. Ford's a buy. I like Ford. $11 billion investment in electric vehicle plants, including expanding their Flat Rock, Michigan plant, which is one of their big plants. That's going to be the initial EV manufacturing hub. The F-Series had its 41st year as America's best-selling truck. Ford best-selling brand in the United States for 8 straight years. Volume improvement across all regions except Africa and the Middle East. They've got cash and marketable securities of $27 billion on hand. Ford is for a marketplace that
dominating,
is well overbought, or the word overbought is being thrown around. Ford is far from overbought. Mark my words on that. Southwest Airlines, earnings per share of 77 cents, in line with the street. Revenues of $5.27 billion, beat the street by 20 million, and that number is up 3.7% in revenue year over year. Southwest closed the week at $60.82 with a price to earnings just over 10. Passenger revenue up 2.5%, unit revenue up 1.9%, load factor of 85%. That means 85% of the planes are full. Average fare down 2.7%. 7%. So even though the passenger revenue's up, they're charging people less. Operating expenses, unfortunately, are up 6.4%, and unit costs are up 4.3%. Southwest is doing a much better job on the passenger side. They've got to watch those expenses, though. I would imagine some of those expenses have to do with the price of oil. Northrop Grumman, more defense.
Missiles.
Those guys sound scary. Northrop Grumman, you don't want those guys coming to your house if you owe money. $2.82 a share. EPS beat the street by 8 cents. Revenues of $6.63 billion. Beat the street by $280 million. That number up 3.6% year over year. I'm sure Northrop Grumman happy that the U.S. government did not go on hold with their budget any further. They like signing. They like signing defense contracts. Yep. Northrop, Lockheed, all those guys. UTX. They're into making money. Raytheon into making money. Speaking of Raytheon, coming up next. Yep. $335.56 for Northrop Grumman to close the week out. Price to earnings just over 29. Their dividend was increased 10% to $1.10 a share. Aerospace up 5%. Mission Systems up 6%. Mission Systems.
That sounds important.
That sounds scary. Technology down 1%. Orbital ATK acquisition closes in the first half of 2018. Orbital ATK, another big defense company that they picked up there in the second half of 2017. Capital expenditures at Northrop Grumman increased to $1 billion. Speaking of defense contractors with scary names, Raytheon. Raytheon reported earnings, EPS of $1.35. EPS last year was $1.87. EPS this year was supposed to be $2.02. They missed by 70 cents almost.
Quite a few, yeah.
But EPS took a 59-cent impact from tax cuts and the Job Act of 2017. They put that in now. They did still miss. There was a miss. They might try to be covering up a miss a little bit by putting this in here and not putting it in a forward quarter.
Right.
They did miss, but they didn't miss by an as egregious number as it sounds like. They took a big hit from having to pay some taxes that they owed. Revenue of $6.78 billion, missed again. $30 million. That revenue number is still up 8% year over year. Raytheon, $208.91 to close the week. Price to earnings of 30.11. Integrated Defense Systems, doesn't sound important, up 6%. Intelligence, Information, and Services, up 4%. That's where they gather the intelligence on you, the information where you are, and then perform the service to snuff you out.
Oh, no.
Missile Systems, up 15%. Space and Airborne Systems, that sounds like a G.I. Joe thing.
Yeah.
Up 4%, up across the board. $8.5 billion in bookings in Q4 alone. And they have a backlog that goes for years. Like Boeing, of $38.2 billion. That's up 4%, that backlog number. Raytheon on the high end of pricing, but the company looks really strong. If you're already in Raytheon, if you're already in Northrop, you're probably a pretty happy camper.
You are.
And you've got missiles backing you up. That doesn't hurt. Rogers Communications up here in Canada reported earnings. EPS of 88 cents, beat the street by 2 cents. Revenues of $3.63 billion. That was in line with the street. That's up 3.4% in revenue year over year. They closed the week at $49.34. Price to earnings of $19.27. They had $419 million earnings versus a $9 million loss last year, so a big turnaround at Rogers. Wireless customers had 354,000 postpaid net additions. The churn was at 1.2%. That's really low. Wireless was up 9%. Cable up 3%. That's really good. Business Solutions up 7%. Media down 20%. You got to expect the media to be being down, but cable up 3%.
That's a surprise.
That's a really decent growing market. Like I said, earnings of $419 million this year. Same time last year, a loss of $9 million. So what a turnaround. Big turnaround. Woo!
3 more pages.
Getting down to the nitty gritty.
Yep.
I'm going to take a swig of this monster.
There's only 10 more to go?
Did you know 3M makes Post-it notes?
Actually, I think I did that. I think I remember looking at the back of Post-it notes and stuff.
3M. Do again, a lot of segments. Earnings per share, they just call things organic growth. A lot of times they just really just whitewash it, right?
It's yada, yada, yada.
Yeah, pretty much, right? Like we do so many things, yada, yada, yada. We end Post-it notes. So EPS at $2.10, beat the street by 7 cents. Revenues of $7.99 billion, beat the street by $110 million. That's up 9% revenue year over year. $258.63 to close the week, a price to earnings of $32.66. Organic growth company-wide, organic growth, up 6%. Electronics and energy up 11%. Safety and graphics up 11%. Organic growth of the consumer business up 5%. Organic growth of the industrial business up 4%. Organic growth of healthcare up 3%. They're growing at 3M. That's what I've learned. Organically, they're growing.
They're natty.
They're all natty. Everything's in a nice pot. They're watering it.
Goldilocks zone.
It's getting the right sunlight. It's in the Goldilocks zone. It's organic.
It's organic.
It's organic. Everything of 3M's can be purchased at Whole Foods. You can eat everything of 3M.
You can, yeah.
Everything. It's
edible.
Delicious. Those post-it notes. Celgene, another big pharmaceutical company, earnings per share of $2, beat the street by 3 cents. Revenues of $3.48 billion, beat the street by $10 million. Up 16.8% in revenue year over year. Big revenue beat. $105.17 to close out the week. Earnings per share, or price to earnings of $29.38. Net product sales up 16.9%. Operating income up 29%. Operating margin grows 300 basis points to 58%. They got $12 billion in cash and marketable securities. Revlimid, a stem cell transplant for patients in countries that allow stem cell transplants, is growing at an exponential rate for a drug. They've got that in phase 3 trials right now that are going to be closing out in 2018 for a lymphoma treatment as well. So they've got a lot of stuff in the pipeline over at Celgene. Strong. I looked into this. I wasn't going to get into all the drugs that do all the kind of jazz, but I can tell you that Revlimid is not the only one. You go down through the top 4 or 5 drugs they got into phase 3 stuff for 2018. Yeah. Everything is showing exemplary marks.
Oh, really?
It looks like they're going to get a lot of those drugs probably greenlit. It seems like a lot of these phase 3 trials are going really well. Celgene could pop. This is a company this is a company that's got a lot of stuff going in the right direction for it. Something to definitely keep an eye on. Caterpillar, we know they're doing fantastic. Dominated the Dow in 2017, mashing along still. Earnings per share, $2.16, beat the street by 37 cents. Revenues of $12.9 billion, beat the street by $920 million. That revenue number up 34.8% year over year. Really expensive, $167.06 a share. Price to earnings of 133. Rolling 3-month worldwide machine sales of 34%. All segments growing. North America outperforming because of increased construction and oil and gas. China continues to grow at an above average rate. Caterpillar is selling equipment like nobody else. It is an expensive company to own right now. The earnings call came out, was really good, and Caterpillar actually had to pull back in the price because I think it's just so expensive. It's had such a good run. Was it number 2, right? Last year.
I think so.
Behind Boeing. I'm pretty sure it was number 2.
Yeah.
Such a good year. Price to earnings of 133. That is way, that is not what I meant by price to earnings should be way out of the ballpark maybe in the future. Caterpillar, great company, growing. But if we're talking overbought, that might be the company that's probably the most overbought.
Number 1, huh?
Just saying. American Airlines, earnings per share at 95 cents, beat the street by 3 cents. Revenues at $10.6 billion, beat the street by $40 million. That number is up 8.3% in revenue year over year. They closed the week at $53.07. A price to earnings of $13.57. That's a pretty decent price to earnings. 11% passenger yield growth on transatlantic flights, so they're able to 11% growth on the amount of money they're making on transatlantic flights off passengers. I would imagine that's not just the ticket price, but selling dinners, all sorts of stuff.
For sure.
And those are long flights, right? Transatlantic.
Oh, yeah.
Woo! That's a long flight to Western Europe. Cargo revenue up 19.7%. Fourth quarter expenses, though, up 9.8% from fourth quarter in 2016. So that's a big jump in expenses. Cost per available seat mile up 7.1%. So it's costing them a lot more. Again, this is the second time we've seen this now. Southwest did the same thing. Basically, the average price, expenses up. It's got to be a fuel thing.
Has to be.
Weren't hedging fuel, expecting oil to go to where it is now. So, I mean, when you're able to not hedge it when it's down for so long or playing in a range that's really tolerable, you're going to take your chances that it goes down as opposed to going up. They're hedging fuel now. I can tell you that.
Oh, yeah.
$1,000 tax cut, bonus checks cut to all non-officer team members at American Airlines, spreading the wealth around.
As they should.
Union Pacific. Man, there are a lot of railway companies announcing earnings today. Do you like trains, Anthony?
I do.
You do like, my kids like trains. The wooden ones with the little magnets that pull other trains around. Those things are fun. Earnings per share of $1.53, missed by 1 cent. Revenues of $5.45 billion, beat by $30 million. Revenue number up 5.4% year over year. Closed the week out at $134.23. Price to earnings low, 9.93. Intermodal volume is flat from 2016. Volume increases in industrial up 28% and in chemicals up 7%. Declines they're seeing in agriculture, automotive, and coal. I thought we were shipping more cars and more coal.
That's what I thought.
Declines in that. That's why I was saying you see it in some companies where they're actually up in that category, down in this one. I wonder if it's not just the routes that they travel on, and that things might just not be as emboldened in those areas of the world or in those areas of the U.S. region as they are in some of the places that some of the other railroad companies go. Because it's strange to see automotive and coal down. I know we had a bit of a down shipment in December as far as automobiles, but automobile shipments for October and November, because of all the people buying vehicles from the insurance settlements from hurricanes, should have been up exponentially in Q4 for Union Pacific, I'd be thinking. $2.03 per gallon average quarterly diesel fuel price. That is up 23% from 2016 because somebody else wasn't hedging fuel. It happens in the railway business as well. Freeport Mcmoran, do you know what they do? They are looking for gold and copper and all sorts of good stuff. Gold is a good thing to be at right now. Earnings per share of 51 cents. That beat the street by 2 cents. Revenues of $5.04 billion. Beat the street by $240 million. And that revenue number, because obviously gold is on its way up and copper has been doing pretty good as well, up 15.1% revenue number year over year. Freeport Mcmoran selling at $19.54. Price to earnings of 16. Copper, $3.21 a pound. 3.7 billion pounds sold in 2017, 3.9 billion pounds to be sold in 2018 is the estimates. Gold, $1,285 an ounce, considerably higher than that right now, up in the 13s. 1.6 million ounces sold in 2017, 2.4 million sold, expected in 2018. And if gold continues to go up, Freeport Mcmoran is going to reap the benefit of that, because you know that they were cost averaging in, pulling that gold out of the earth at a way cheaper price than this. They were pulling it out when it was $900. So selling it at 13 something, coup. Molly Bedlam, $9.79 a pound for Molly Bedlam. 95 million pounds pulled out in 2017, 91 million pounds in 2018 is the estimate. So down 4 million pounds is the estimate from last year. They repaid $1.7 billion in debt, including paying off some senior notes, some 2020 senior notes early. Got some extra money, $617 million worth of 2020 senior notes. They've got $4.4 billion in cash right now and $13.1 billion in debt. They are just hoping that gold price stays steady where it is. Intel, earnings per share of $1.08, beat the street by 21 cents. Revenues of $17.1 billion, beat the street by $760 million. That revenue number, 4.3% up year over year. Intel closed the week at 50.08, trying to make a little bit of the comebacks after the meltdown and Spectre chip flaws that were found in all the iPhones and everything else. Everything that had Intel stuff in it, right? Operating margin, 27%. Operating expenses of $5.4 billion in quarter four, down 4% year over year, so spending a little less. The tax rate for Intel is only 14% this year. PC-centric client computing group down 2% year over year. Data center group up 20%. Internet of Things group up 21%. And programmable solutions group up 35%. This is what we were talking about. There's so many segments. They do so many things. They have to break them down to these giant macro categories. Each one of those segments breaks down into 1,000 things. I don't like that much when we're talking about just looking at it. When you're talking about doing research on a company, I take a look at Programmable Solutions Group, up 35%. If I don't go into there and see what's the thing that's keeping that up, I don't know if it's not one or two segments that could be reaching the tail end of their growth, keeping that whole category up while everything else is kind of languishing. We look at a company last week we did earnings for. I can't think of who it was off the top of my head. I think it was HP IBM. And they bury the cloud computing in one of the segments that isn't doing very well. It's down or up nominally, but when you look at cloud in and of itself, it was up almost 30%. It was, yeah. So a good segment gets buried and props up a bunch of bums. It's like communism. It's like communism for the good segments. You got to get the bread line with the guys who don't hoe a field as fast as you do. That's BS. That is BS. So Intel, such a big company, just buries stuff in giant groups. If you're doing any investing in a company like Intel, these are one of those companies. 3M. We talked about a few companies earlier that were the same way. You really got to dig into them. You got to dig in, get fork, knife, get in there. 5-course meal, right? Get in there. Starbucks, earnings per share of 65 cents, beat the street by 8. Revenues of $6.07 billion, missed by $110 million. That revenue number, though, up 5.9% year over year. Starbucks, 5.9% growth. I mean, when you're talking about economies doing well, Starbucks is a company that's actually kind of struggling. Their revenue numbers even up because the economy is just doing so well. There's so much money to go around. Starbucks, $57.99 a share to close the week. Price to earnings of $29.44. Global comparable store sales up 2%. 3% was the estimate, unfortunately. Transactions are flat. Starbucks reward membership, though, up 11%. It's about 20% of people, 22% of people making Starbucks purchases that are using that rewards membership card. Margins, unfortunately, fell 80 basis points to 19.2%. They're not making as much money. They're not having as much comparable store sales traffic as they were expected to have. It's a company that's really reached the tail end of their growth. Starbucks, I wouldn't own it. Just saying, even though that revenue number's up, even though they beat EPS, I just don't see the expansion possibilities for a company like Starbucks. That coffee thing has, it's reached its tipping point.
I think so.
We're pretty satiated as far as that goes.
Oh, for sure.
There you go. Western Digital, a big component of the semiconductor sector, finally got their stuff sorted out with Toshiba and their chip unit in the purchase of SanDisk from a couple of years ago. EPS of $3.95, beat the street by 16 cents. Revenues of $5.34 billion, beat the street by 40 million. That revenue number up 9.2% year over year. Western Digital closed the week at $89.60. Price to earnings 74, very high. Be careful. Western Digital is the leader in a lot of stuff. They do this HDD, like the hard drive stuff. They're leading in the Helium platform. So this Helium version of it, they're in the 4th generation of it. They are the world leader of it. In NAND flash, they're making solid progress in 3D conversion, which is the next level of NAND flash memory that's being done at 64 and 96 layers. So really high-end stuff being done at Western Digital. It is so deep to get into what semiconductors, NAND flash, DRAM do. I mean, it is a whole other basket of worms. Any kind of purchasing of the semiconductor industry right now, I would advise, instead of trying to pick a winner, even though the sector's up as a whole, continue to pick the sector.
Yes.
The sector is going to continue to grow as more and more things in the world need more and more semiconductors. You're probably going to find more winners in the basket than you're going to find an individual winner that's going to just run.
Oh, yeah.
Even though individual winners are running. Like the only guy that didn't run last year was Qualcomm. Everybody else ran. Texas Instruments, Western Digital, Broadcom. Everybody ran, right? But you're going to do a better job, I think, picking the Philadelphia Semiconductor Index. Go buy the basket. Semiconductor Index. Honeywell, another company, many segments. Earnings per share of $1.85, beat the street by 1 cent. Revenues of $10.84 billion, beat the street by 90 million. That number is up 8.6% year over year. Honeywell closed the week at $164.99 with a price to earnings of 25. Transformation to a software industrial leader is in full swing over at Honeywell as they continue to spread themselves out into as many sectors of the world quietly as they possibly can. Honeywell is in everything. They've got a 2018 spinoff of their homes and global distribution business, as well as their transportation and systems business. Organic sales growth, like I said, giant companies, they have their organic sales growth up 6% across the Honeywell brands. They've made recent business transactions or deals with ADT, the security company, because they do stuff in the security field, with United Airlines as they're building components inside United Airlines cockpits, with 100,000 plus mobility devices that are currently being built. Honeywell does a bit of everything, including making air conditioners and they do it all. They do it all, everything. Honeywell, they made you. Colgate, they redid your tricep. I'm sure of it. That's a Honeywell tricep. Colgate, Palmolive, they make toothpaste. They clean you.
And dish soap.
They do. I prefer to eat the toothpaste rather than the dish soap. On a case-by-case basis. Just saying, there's some bad toothpaste and some really tasty dish soap.
Sure.
But on a case-by-case basis, 60/40 toothpaste. Just saying, earnings per share 75 cents was flat at Colgate Palmolive. Revenue of $3.89 billion, missed the street's estimate by $40 million, but that revenue number is still up 4.6% year over year. Colgate Palmolive closed the week at $73.56, price to earnings over 28. Organic sales up 2%. The estimate was for 2.9. In the U.S., it was up 1%. In Asia, it was up 2.5%. Global unit volume was up 3%, while pricing was down 1%. Gross margins slipped to 60.4% from 60.8%. That's a pretty high margin still, but we want to see them making more money. That is a lot of margin on toothpaste.
I know.
Damn, it doesn't cost much to make toothpaste, does it? Operating profit margin slipped 190 basis points to 26%. That's the profit margin that you're really concerned with. Still, 26%, not the worst profit margin in the world. Lear. Do you know what Lear does?
Jets.
No, they don't. They don't.
No.
They don't do jets. They make seats.
I was going to say seats.
They make seats.
Because I think of Lear jets, and then I was like, wait, we went over this before. It is seats.
Full disclosure.
It is.
Full disclosure. Been in Lear for a bit. EPS $4.38. Great earnings call, by the way, from a great company. $4.38, up 10 cents. Beat the street by 10 cents. Revenues of $5.36 billion. Beat the street by 110 million. Revenues up 15.5% year over year. Lear closed the week at $197.99. Price to earnings still around 12. Sales up 11%, including seating up 14.2% and E-Systems up 20.2%. Sales in North America up 8.7%, Europe and Africa 29%, Asia 5.5%, South America 13%. Gross margins fell 30 basis points to 10.7%. That's the only concern, is that those margins are very, very small. Very good company. Has been on a run for years. Up a lot. Up a lot. Really good company, but up a lot. Just wanted to cover it because I like Lear. Good company. AbbVie. So like Abbott Labs we did earlier, they're the established pharmaceuticals. This is the R&D. We're going to go over actually some of the drugs that they actually do. EPS of $1.48, up, beat the street by 4 cents. Revenues of $7.74 billion, beat the street by 210 million. That number in revenue is up 13.8% year over year. AbbVie closed the week at $123.21. Price to earnings of $29.98. Now, some of the drugs that they make, Humira, that's the big one, up 14% in sales on heavy growth and consistent price increases because they're gouging you. That is a rheumatoid arthritis drug and apparently a very, very successful one, doing very well. I don't have rheumatoid arthritis personally, so I've never used Humira. Tough to give full disclosure. Haven't dabbled in Humira yet. Imbruvica up 38.7%. That is a treatment for B-cell cancers. HCV up 63.4%. That is a treatment for hepatitis C. These are their big sellers, and their other big seller, Androgel, down 19.6%. We know we had a big cash settlement for a guy who had a heart attack on Androgel.
Million.
I wonder if they haven't gone out and just asked people to kind of limit the prescribing of Androgel or to taper it, to say, don't give it to everybody. Maybe not.
Of course.
They got to be in good physical condition and all that kind of stuff. So Androgel down. That's one of their big brands, down 19.6% in sales. But AbbVie, killing it.
Oh, for sure.
Seriously, like you take a look at their drug pipeline, what they've got going on. Humira, Imbruvica, HCV isn't even that's just the tip of the iceberg.
Yeah.
This is a company that's moving, AbbVie and Abbott Labs, both right directions, solid. Celgene earlier. Some really good pharmaceutical earnings this week. That's it. That's it for earnings. That's 31 earnings call. Do you want to know about the earnings for next week, sir?
Of course I do.
Can I have a drink of this?
Yes, you may. Wet your whistle.
Thanks for sticking with us. We're an hour and 40 minutes in earnings.
Yes, we are.
You want to get all the earnings in here instead of on the videos during the week. So we need to get in depth with the earnings, which means I need to flesh this out, which means I read 31 earnings calls transcripts.
You did.
In the last couple of days, which was fun. I had a good time. I learned a lot. I mean, I knew a lot of it, but it's nice to get numbers caught up and just to see how things are doing. I was shocked by a couple of the numbers that I found, but not overly shocked as a whole to find out that another earnings season is officially kicked off. Banks did better than we thought last week or 2 weeks ago. This week, we get into the crux of the marketplace. Everything's still ripping along. Next week, Next week, Seagate, Lockheed Martin, AMD, McDonald's, EA, Pfizer, Sprint, Microsoft, eBay, Facebook, Qualcomm, PayPal, Alibaba, Apple, Alphabet, Amazon, UPS, MasterCard, Exxon, Chevron, ConocoPhillips, and Merck, and a whole lot more, I would imagine.
I would imagine so.
And that is episode number 14.
14 in the
Sir,
bag.
how's your tricep feeling?
It hurts.
It hurts.
It hurts.
I will take you home so you can get some rest.
Thank you.
Episode 14 in the bag. It was a pleasure again.
It definitely was. It's always a pleasure.
I'm glad you didn't die under the anesthesia.
No, I didn't.
It would have been way more weird for me here talking to the wall.
That's very true.
I just don't think the wall has as much personality as you. Close.
No, close. Very close.
But not as much.
No.
You got a little more color in your cheeks, too.
Definitely.
It was a pleasure doing this with you for Wall Street Breakdown. I am Cody.
I am Anthony.
We love you guys. We thank you guys for stopping by. Episode number 14. If there's anything you'd like to see or hear, anything you want us to change, we want to hear. We like comments from you guys. Like, subscribe, come back every Sunday for the podcast. We cover all of it. Stay with us during the week as we continue to help people get invested in the right way in the marketplace as a retail investor. We will see you guys during the week. Have yourselves an outstanding rest of your day.